Thanks so much for tuning into the trade setup. I'm Neeraj Shah. It's an interesting week simply because we've come off a fairly strong one with fairly decent market breadth, and we enter right into a week which has got a bunch of things lined up for itself, right? There is results to watch out for. There is central bank, there is inflation announcements that will come. So lots to monitor all through this week. First, the global news flow. Joe Biden says that action on China import tariffs still being discussed, not finalized as yet. Macau has shut all its casinos as the city's worst outbreak widens. The reason I keep on bringing you some of these news flow around Macau and China and Hong Kong, it just shows the policy that China has embraced, and it may not be out of whack to think that China may keep on doing things intermittently uh, for during the course of this outbreak. China's regulator has said banks will go all out to bolster lending, and Elon Musk has backed out of the 44 billion bid for Twitter, citing bots. But I think we'll hear more from this saga. But it's an interesting corporate development around the world, and therefore thought we bring it. Now, what did the U.S. markets do on Friday? Well, a bit of a rub of the green for the Nasdaq. But otherwise, it was a fairly flattish move and flattish developments across other asset classes as well. So frankly, if you just look at what's happened to Bitcoin, down about 4%, but hovering around the 20,000 mark. Dollar index about 107, and that strength continues, right? For the dollar index, just continues to inch up higher. The 10-year yield at 309, so back from the lows of about 2.86 or thereabouts. But certainly not at alarming levels, but above the 3 mark for sure. In fact, I haven't mentioned crude, but that has declined a little bit as well. So that is something to watch out for. The SGX Nifty should come up on your screen next, and that shows about a downtick of 0.5%, if I'm not wrong. I mean, a soft start at least, if not anything else. About 100 odd points, 0.67% lower. So watch out for that as well. What to watch out for? That's the other key thing to monitor in this session, for the week rather, not just for the day today. It's an important week, as I said, with a bunch of Q1 results. HCA Tech, HDFC Bank, LTI, Mindtree, and LTTS through the week. I think Tata Elxsi also comes out. So mid-cap IT or non-Nifty IT is in focus. Broking is in focus with 5paisa and Angel Broking. So stuff to watch out for. India inflation data as well as the US inflation data on Wednesday evening could well be key determinants of how the world thinks about inflation and interest rates. And Chinese Q2 GDP numbers on Friday morning, if it's a number which could be scary, you could probably expect some more announcements around bolstering the economy. As I said, China regulators already said that banks will go all out to bolster lending. We heard last week or last week about some stimulus which brought about a turn in the metal space as well. So lots to watch out for. Now, what's the trade setup? I think quiet start is very likely. We'll start off about 0.5% lower, but the week ahead is going to be very, very choppy, I believe, simply because of one, the earnings, and two, because of, like I said, the inflation print that comes out both from India and the US. So that's something to watch out for. I read multiple chartist notes over the weekend, and everybody talks of this 16,500 as the key hurdle for an up move to about 16,800 to 16,900. So likely that, I mean, people believe that we could move there. It is a buy on dips market, but 16,500 remains a key hurdle. A corrective move in TCS as well as Nifty IT likely today could well impact the day's trade. And the momentum plus news flow starting to build in real estate, and it becomes a key theme to watch this whole of this week. Okay, what else to monitor? I think let's try and focus on some stocks to monitor in the session today. TCS remains the key draw. First, the numbers. Revenue was up about 4.28% at 52758. The expectations were 52473. So on that count, no disappointments. EBIT though fell 12186 versus 12413. EBIT margin at 23.1% versus 24.96%. The expectations were of a 24% EBIT margin delivery. The margins are now probably, I mean, around multi-year low, if I'm not wrong. And that is the point, that at least TCS and Infosys have run up quite a bit, have not fallen as much as some of the others, and I'll get to that in a moment. and which is why this margin disappointment remains a bit of a problem. The net profit fell about 4.5% to 9,478 crores versus 9,926 crores. The estimates were 9,908 crores. Attrition inched up, by the way, to 19.7 versus 17.4%. Now, I think JP Morgan has summed this up very well, and which was important to get their view. So they have an underweight rating with a target price of 2,800. They said the results and the margin trajectory don't stand up to the burden of valuations. So uh, it's interesting to see that they see Q1 23 print was underwhelming with a 60 basis point margin miss versus street margins and slowing deal win and hiring trajectory. Now they are hypothesizing they see sustained margin pressures in FY23 from supply challenges and expect revenue headwinds in the second half as macro concerns materialize in delays and deferrals. By this, I presume they mean rather by this they mean the US macro challenges, which will materialize into delays and deferrals. The revenue growth slowing down to single digits by Q4 is what they see, and the earnings trajectory slowing to single digits over the next 3 years is JPM's view on TCS. They have cut the margin expectations by 30 basis points and earnings by 2 to 3% over 23 to 25. I think their overwhelming point remains that the valuations are still high and that will not hold count. So, well, it'll be interesting. I suspect, like I said, that TCS could well be a stock that could drag the IT industry, IT sector as well lower. The other analysts, it's a mixed bag. You know, Bernstein, for example, has an outperform, a target price much higher. Goldman has a buy, Nomura is a reduce, Morgan Stanley is an equal weight, Kotak is an add. So it's all across the place. I saw Nirmal Bang, and Nirmal Bang is important also from a perspective of how Girish Pai, who tracks IT, there is a veteran of the IT space. He's got a target of 2,400. So it's all over the place, to be very honest. But yeah, TCS could well be a drag. The only factor, viewers, that you have to keep in mind is that the last rally from when Nifty's moved up from 15,200 to wherever we are right now, Nifty IT is hardly moved. Look at the YTD performance. Nifty down 8%. Nifty IT 27% lower. TCS is corrected about 14.5. So you could argue both ways, right? TCS is not corrected as much as some of the IT stocks, so maybe there's room to go. But Nifty IT itself has corrected quite viciously compared to the Nifty, and therefore, could there be more downsides? Maybe not. So it's a bit of a tug of war. I suspect that today would be a day of some bit of a corrective move in TCS and Nifty IT along with. Whether it will last or no is a question. For today, though, certainly under pressure. Avenue Supermarts came out with numbers. The revenues up 14%, margins at 10% versus 8.4. The net profit up 51% quarter on quarter at 642 versus 426. This is as per the company disclosure. So, of course, they did really well on these numbers. Could it be a stock that could actually do really well? Is the question. This blended revenue per square foot was about 13% lower versus pre-COVID levels, but EBITDA was good. Valuations are, of course, very expensive, so never an argument on Avenue Supermart's valuations. They'll always remain expensive. So you can't argue that, is DMart expensive and therefore shouldn't be bought or shouldn't be held. I think most brokerages that I'm seeing have also kept out a hold rating on this way on normalized quarter. So hardly any downtick, if you will, or disappointments on the back of these numbers. MMTC revenue fell, but EBITDA okay, EBITDA margin okay, net profit okay. Maybe the stock reacts. Very difficult to understand this one, to be honest, for me at least. So just giving you the numbers, don't quite have a handle on how this will react, but it's an interesting stock. So just brought it out. Bandhan's Q1 update, the bank loans and advances rose 20% in the quarter. Deposits grew about 20% as well. CASA ratio stood at 43%. I think the issue with Bandhan is what people believe will happen in some of the states impacted by flooding, and therefore what could happen to NPAs in the quarters to come. And therefore, maybe not see too much of traction, especially in a day like today. Continued approvals keep on coming in for HDFC and HDFC Bank. They've now received the approval from the PFRDA as well. Approvals from CCI, NCLT, and the company's creditors and shareholders are still pending. But yeah, they keep on coming. HAL again continues developments. Now they're going to be jointly developing engines for military helicopters with Safran from France. The new JV will develop and produce engines in India. Engines will be used by the Navy in multiple ways. So the Navy strengthens, but HAL becomes the predominant supplier. And remember, viewers, we spoke to the HAL management about a month ago. They don't normally talk, I think, but gave some vision about how FY23 might possibly still be a 6-7% year growth, maybe even FY24, FY25 onwards. I believe growth will double to 15% for a number of years. So I think you got to consider that when you're looking at some of the defense stocks like HAL. Some stocks in news, rice stocks, because rice faces squeeze on higher fertilizer costs and booming demand. So it'll be interesting. The demand is high, input costs are expensive. Can rice companies maintain margins and increase exports, especially from India? Actually, we'll talk to one of them today at 10 a.m., Kohinoor Foods, if I'm not wrong, or LT Foods is coming today. So it'll be interesting to hear what they have to say. Himadri Chemicals, this is important for the stock. The promoter families have settled the dispute, and therefore, one promoter will now run the business, the other won't. And this should maybe augur well. So if this stock reacts, you know why it is reacting. And JSW Energy Business Standard reports that they're in talks with PEs and foreign banks for Mitra Energy acquisition. Would be interesting to see how this one reacts, if at all. Like I said, real estate is in focus. Motilal Oswal met the macro tech management, and they say they maintain a buy with the target price of 1570. No changes there. I'm just bringing it out. And they say it looks to capture market share in micro markets with a niche presence. They've raised the FY24 pre-sales estimates by 7%. They believe that the current valuations make them believe, the current valuations make them believe that the street is not giving any kind of credence to what macro can do ahead. The street is currently valuing it only on the existing project NAV. Interesting to see how it goes. There's a lot of talk over the weekend about Adani Group entering telecom as a space. I think they've given a clarification that their intention is not to be in the consumer mobility space. They are participating in the spectrum auction to provide private network solutions. Now, you take it at face value when they're saying this, because a lot of rumors floating around. I read a sales note which said that, oh, they can also get it on a lease from other players. So why do they need to enter this in the first place? Who knows? I think the group knows best. Standard disclaimer, of course. They own a large part of. No, they are not in the process. They've already acquired. So this disclaimer, but essentially they own 49% stake in Critalline Business Media, which is the owner of BQ Prime. So keep that at the back of your mind. But yeah, telecom. I don't know if Jio or Vodafone or Bharti face some bit of downward pressure today. I doubt after this clarification, but you never know. Strange things happen as well. Lastly, watch out for some PSU banks, because apparently the government has said that they will remove the threshold to allow private firms to own the over 10% stake in the state-run banks. So it could be interesting. And Interglobe Aviation, now technicians are apparently on leave due to low wages. Last week we had pilots and crew being on leave because they wanted to go apparently to the air on the Air India recruitment day. Interesting, some issues cropping up for Interglobe Aviation at a point of time when Akasa Air as well as even Jet are likely to come back, and Air India is only building up muscle. So the skies are cloudy, maybe. Anyways, let's wait and watch. For now, though, suffice to say that the day will start off slightly weak, but around those levels then. Nifty IT probably the principal culprit. The week having a bunch of inflation data prints as well as results, fairly important results from an IT perspective, because of 4 large non-Nifty IT names also coming out in addition to HCL Technologies. So important week for Nifty IT as well, especially after what TCS has done. Let's wait and watch how the others shape up too. Thanks so much for tuning in, and have a great week ahead, everybody.